afternoon, everybody. Let's go ahead and get started. This is Marjorie. I'm going to be leading our webinar, QuickBooks Online. All right, today we're going to talk about prepaid expenses and the best way to treat them inside of QuickBooks Online. Of course, this is, when we talked about month-end close a couple weeks ago, one of the things that we just make sure that our customers understand is that your balance sheet, all accounts on your balance sheet should be reconciled. Right? There's a couple of accounts you can't reconcile, like retained earnings, but prepaid expenses for sure is one of those accounts that you can reconcile, so we can run reports, subledger reports that tell us exactly what substantiates that balance that's sitting on your balance sheet. So that's what we're going to focus on today. Just a reminder about who we are here at Fourlane and the services that we offer. So we do process documentation, financial reporting, and review, which is what we're talking about today. But the whole goal of everything we do is to get people data to make decisions, right? That should be what our profession does, is get businesses data so that they can make a decision on what they should do next. And that has been so crucial in the last couple of years. So that's why we want to make sure that we have things like this to substantiate all that data. All right, I'm going to hop in products, but this is what we are going to be going through today. So creating prepaid expense account, creating a bill. I'm going to do it just as a bill, but it's the same logic applies as checks and charges. Creating a journal entry, memorizing it, and then looking at the reporting and the reconciliation around prepaids. So a couple of examples. Let me hop in products. So first of all, as always, if you just look up QuickBooks Online Sample Company File, you can see this test drive and follow along with me. Everybody is allowed to do that. You can come into the QuickBooks Online Advanced here. I always start with Advanced because then you can see everything. That way, you know what you're missing when you choose not to choose Advanced. You can make an educated decision. If you didn't even know it exists, right, then you are over here trying to create software ideas. Because you're like, this should be easier. Then voila, it's in the higher level of QuickBooks. Okay, so inside the file, let me say a couple examples of prepaid expenses, things that we see the most frequently, right? So prepaid insurance is probably the most common. You pay for a year of insurance up front, and then you need to amortize it over the 12 months, right? Because if I paid for my 2024 insurance policy in December of 2023, I should not be, as an accrual-based company, I should not be taking that expense in 2023. I should be taking it in 2024, okay? Taking it as I am utilizing it, which is month by month in 2024. Other ways that we see this, Salesforce sometimes will do a 90-day charge into it, charges a year up front for some versions of its software. People will pay 3 years up front, sometimes in a contract, in order to get a better price discount. So there's lots of different ways that you can see these kinds of things happening. Now, of course, all of this, you want to make sure it's material. If you pay for a year of Netflix up front and it's $100, please don't amortize it. No company should do that. Right? Pick a threshold that is a valid number for your business. If you need help with that, definitely talk with your CPA. Okay, so first we're going to go ahead into our chart of accounts. And we are going to, oops, I went into account settings, I'm sorry. We are going to go to our chart of accounts. I saw accounts and just clicked. And we're going to create a new account. And so the prepaid expenses generally is an other current asset. Other current asset, again, is that it should be within a year, right? Like it should be amortized within a year. It should be coming off of your books within a year's time. So we have prepaid expenses in here already. Sometimes I will see people break out prepaid subscriptions versus prepaid insurances, just so that they can understand. Again, you want to make sure that your buckets are material. If it's sitting in there, even one is $5,000 and the other's $5,000, it's probably not material to have two separate accounts for that. If it's sitting in there as, you know, 100,000 in your prepaid insurance, and then, you know, 97,000 in your prepaid subscriptions. That might be a material thing to keep separate. A lot of these subscriptions too is, again, software-based, digital type things. So you just need to pay attention to it when those bills come through. So I'm just going to set it up as prepaid. Prepaid insurance, so that you guys can see what it looks like. Can put a description in here. The tax form is prepaid expenses. It's going in under an account that I already have that exists in here, prepaid expenses. And then it shows you what it looks like on the balance sheet. So I'm going to go ahead and save that. We have our prepaid insurance account set up. Now, how do we get the transaction, the balance into there? So usually we're receiving a bill. So I'm going to do two separate ones. I'm going to do one for a annual, and I'm going to do one for a 90-day period one. So when we come in to our transactions, I'm going to do it as a bill. But again, you could put it in as an expense or as a check on a credit card transaction. I'm going to choose Books by Bessie. It doesn't really matter who the vendor is, right? That's not the point of all of this. I am going to put in the bill date as September 1st, sorry. And then down below here in our category, we're going to put it to prepaid insurance, okay? Now, oftentimes in the description, best practice is to put in the time frame that you're paying for. So this is from 9/1/23 through 8/31/24. That way you don't have to go pull the bill to look up what the time frame is when you're trying to figure things out in the future. And why this matters too is, let's say like midway through the year, you make a modification and they decide that they're going to chunk in an extra $5,000 based off that modification. Again, that time frame matters, right? Because you might move your amortization from being $1,000 a month to being $1,500 a month to pick up that extra amount that they're allocating. So time frame really is helpful to put in that description. Of course, you can attach things into QuickBooks Online as well, but then you have to open the attachment, right? So just put in the description, please. Okay, so I can go ahead and save this bill and exit out of here. Now, when I look at my chart of accounts, if I come down to oh, you know what? I'm sorry. That was silly. I should have changed the amount. Let me just change the amount real quick. So we're going to put it in at $12,000. Okay. Let's see. Again, nobody wants to amortize $75 over a year. Okay. So there's the bill put in the system here. It's got that date range in here, so I understand what it is, and then I can move on. Now, this would be sitting in our balance sheet, right? And then what we would do next is we would have to set up to accept the amortization. So that's the movement off the balance sheet onto the P&L to expense along the way as we're utilizing this $12,000, okay? So how we would do that is generally through a journal entry. When I come in here, the first one is going to be September 1st. Now, I have had people ask me why on the bill I don't expense the $1,000 on the bill and then put $11,000 in to prepaids. That is something that you can do. Take care of the first one on the original transaction. I just think it's a lot cleaner to see the 12 journal entries, right? To say, oh, I've got this one bill that's a year. I see 12 journal entries against that. Now I know I'm good. It just helps my brain a little bit more. So the account that we are going to be taking away from crediting, right, would be that prepaid insurance account, because it is sitting there in there as a debit right now. Amortize monthly insurance. Now, this is a crucial part of it, is in the name, you want to make sure to reference the vendor name. Okay, so the Books by Bessie that we put in there. There we go. Then the second line that we're going to have is hitting the expense. The way to make an expense go up is to debit it. So we're just going to put some amount to insurance. Hopefully we have an insurance expense account. Okay, And same thing, I prefer to put the vendor on both lines because then if I'm ever running an expense report, I can see, even though it's a journal entry, like what vendor is this associated with. Okay, helps me tie it back. Helps me remember what I'm looking at when I'm looking at details if I have to look at details. Now I'm going to save this transaction. When I save this transaction, it's posting, right? So these things happen. The movement happens. At the same time, I'm going to make this a recurring transaction and say it's my monthly insurance. And it's going to be scheduled. I want to create it 15 days in advance. I always like to create things ahead of time so that they show up for me. The monthly interval is monthly on the first of every 1 month with the start date of October 1st, right? Because I just posted the September one, and then an end date of 8/31/2024. Okay. And then I can save my template. So this allows it for it to post automatically. Okay. Now, sometimes when I'm doing this for just like a 90-day period, I'll just go in and post all three. I'll just post them, right? Like, or if it's especially a 60-day period that we're talking about amortizing something, I'll just post both of them at the same time. It's easier for me. But if we're talking about over a year, I don't want those future dated transactions in my system. All right. So there's that journal entry. I'm going to go ahead and get to the report now. So the way that we think about these reports, this part has to be done in QuickBooks Online Advanced because of the new reporting, the new Magic Wand reporting that you guys have heard me talk about. So when I come in here, I can hit create a new report. I'm going to start from scratch. I don't like building with the wizard. It takes me longer to undo than it does for me just to do. So I'm going to start adding my columns here. So first of all, what we want to add is we want to add the account. And I don't really need the account on the report, but I need to add the column here because in order to filter in this report setup, you do need to have the column added. You need to have it added to the screen. You don't have to show it per se, but you need to add it. So the account that I'm talking about, we're scrolling down past sales. I don't like using just sales transactions, just expense transactions. I like going down to the transaction because that'll cover both sales and expense transactions if I need to. And so when I type in account here, it just shows me only the fields that have something with account in it. And so I'm clicking into the line item and I want to see the account name. Okay. So there are the account name. And I have to see it on here in order to filter by it. So I have to add it. Then the next one that I want to look at is cleared. Anytime we're talking about running a subledger report or reconciling the balance sheet, we want to add the cleared field because we want the cleared to be no. Because what we want to see is everything that has not been reconciled yet on my report, right? And in the case of prepaids, it should be $12,000 in, $12,000 out. And I'll show you what the reconciliation looks like in just a second here. But that cleared field is something we want to filter by. Okay, so we want to see cleared on the line items on the transactions. The next thing that we want is we want to have the vendor name. Vendor, oh my gosh, vendor name. Okay, and so same thing down to the transaction tab, line items, vendor name. We add that in there. Not all transactions are going to have a vendor name, right? Then we have posting or non-posting. This allows me to filter out, you know, I'm looking at all transactions at this point. I'm looking at a table with all transactions in it. I don't care about non-posting transactions. I don't want it to muddy my waters right in here. So I want to add it so I can filter out non-posting transactions. Then the last thing I want is the amount. right? So how much are we talking about? And again, this is going to go under the transaction area, line items, and then we have the amount line. Okay. All right. So now I have this in my report, all the columns that I want. I am going to filter the report. See, now that I have these columns in here, that's what it allows me to filter by. So I'm going to choose account equals, and I want that prepaid insurance account. There are my two transactions. Woohoo! Now to continue with this report, right, I said I need posting to be there because I want it to be posting yes. I only want to see transactions that are posting transactions that would take off purchase orders and estimates. And then I also want that cleared status to be equal to uncleared. Okay. So those are my filters that I'm going to set up on here. And again, the way that I figured this out, I'm going through this very quickly because we only have a couple, 30 minutes here. But the way that you figure it out is you add the fields, and then you look at it and you go, what don't I need? What do I not need to see on here? Okay, let me filter that off. What do I need to see on here? Let me filter that off. Okay. And then the last thing is I'm going to group by vendor name as well. It just helps me to keep things organized. We do need to edit our report. I'm going to call this prepaid subledger, and save it. Okay, so now you can see in here we have $12,000, $1,000 pulled out. The total is $11,000. And this is as of September 23. So that is also something to be aware of. You might have to say this fiscal year or this year to capture more if you have posted some in the future. Okay. All right, so let's add another transaction. So I'm going to go ahead and add a bill. And I'm going to stick it to prepaid insurance, even though this one isn't prepaid insurance. So just, sorry. I'm going to do Salesforce. Okay. So I'm adding a new vendor, salesforce.com. I come down here to prepaid. And again, I am going to stick it to prepaid insurance, even though Salesforce doesn't do insurance. I'm saying the time frame for this is 8/30. This could be 8/15, by the way. It doesn't. 8/1. It could be 8/15, and you have to stick some of it in the correct month. So 8/1 through September, October, 10/31/23. Quarterly SODC payment. The amount is $90,000, right? And the date on the bill is September 1st. Okay, now because it's supposed to be covering August, I'm going to go in there and put in the journal entry. I'm going to go back to August, put in the account. Prepaid, and I'm going to credit it for $30,000. Now, you know too, right? If I put in 90,000 divided by 3, it'll calculate for me. So if it's not a real simple number, you can put the math in there and figure it out the first time. Amortize SFDC payment, subscription. And then I would put in the name over here. And then I would come over and put in, subscriptions, expense, or whatever. And then also put in SFDC. Okay. Now I'm going to save this transaction that picks up August. I'm going to copy this transaction and pick up September. save that. I'm going to, because it's just one more, I don't need to memorize it to have this auto post, and it's September 7th anyway. I'm going to just copy it and put it in October at the same time. Okay. All right. Now I have that in there. When I go back to my custom reports and I pull up my prepaid subledger, right? It has two of them. It's got SFDC and it's got Books by Bessie. All right. I'm going to pretend that I'm closing out October now. So I'm going to move it to this year so you can see the entirety. So you can see when I'm looking at this report, if I'm looking at entirety, I go, oh, Salesforce is 0. So I need to go reconcile that because I don't want it to show up. We've already taken care of it. It's already coming off, right? So I need to go reconcile that now that we've posted all the 3 months of that Salesforce bill. So then you would come in and you would go into your reconcile and see all of the helpful tips. So I come into my prepaid insurance. Anytime we are reconciling an account and that account does not come with a statement, right? There's not a bank is not going to issue us a statement for our prepaid insurance. It's not going to be a thing. So anytime we have that and it doesn't come with a statement, what we're looking for is we're looking for the in and the out. We're looking for the prepaid expenses bill and then all of the journal entries that bring that account for that bill down to 0. Okay. So therefore, when we put an ending balance here, we should always be putting an ending balance of 0. Okay, we should show the in and the out. So if I come in, I'm going to pretend that it's for September. We should never have service charges when we're doing anything like this. And then I'm going to start reconciling. Okay. All the pop-ups. That is the one thing about using the sample file is that you cannot, when you check that box, says, don't show me this again. Well, when you're using a sample file, it will always show it to you again because it resets as soon as you log out. Okay, so now we're in here. Now, normally I would have that report, right? So I would have that report pulled up maybe on another screen, that prepaid report, so that I know exactly which transactions I need to check off to have it reconciled. Right, so I know, oh, the Salesforce ones, I need to check those off. But then when you come in here, you can sort by payee, which makes things a little bit easier when you're trying to find them. And then I can check off all of the different Salesforce ones that net out to 0. It's showing me the difference of 0, which says, yay. I like how they're so positive. You did it. Good job. We as accountants, we understand that feeling though. That is a feeling. It should be better than you did it. But then we can go ahead and say finish now, okay? So we've reconciled off the in and the out. If I come back now next month and I'm needing to reconcile something off, right, so November, what I'm left with in the reconciliation is now only those Books by Bessie. Okay. Now, here's also where that memo really plays a part, right? Because if you see something in here and it says it should have ended in 2022, we need to go figure out, right? Because nothing should be sitting on the balance sheet that forever. It needs to come off the balance sheet and get to the P&L at some point in time. So we don't want things sitting there forever and ever. So if you see a 2022 in here, then that's a key way to know, like, hey, maybe I need to go check out what's happening with this. It's time to expense it. Let's get it off our balance sheet. Okay, so coming back into our report now, right? So if I refresh this report, now when I look at it, because I have it only showing me uncleared transactions, then those Salesforce ones have come off of this report, and I'm only left with my Books by Bessie, right, which I'm still in the process of reconciling, is still a number on my balance sheet, so I need it to show on this report so I could substantiate why there's a balance on my balance sheet to leadership or the bank or whoever, right? Okay, so that's prepaids. That's how to work prepaids inside of QuickBooks. Now, I know we did this before. We did a customer deposits one. It's the same thing, just customer deposits or liabilities, but it's the same thing. But there are other ways that you could think of and apply this same strategy. Web store clearing, same thing. It's an in and an out, right? We have a deposit that comes into the bank account, and then that deposit is offset to a whole bunch of sales receipts that make up that deposit. Web store clearing is a similar thing. Okay. But you can see we do not like to upsell customers to a level that they do not need, but the reporting, having this ability to build out the reports like this, although it can be difficult, you really have to understand it, understand the tables and how they relate to each other. It is very powerful, so you can get to that number, those metrics that you need to make decisions. All right, guys. Coming up soon, so we continue to have some reports review. I took a break from reports because I was there's a lot of reports that come standard, and I took a little break from them because it was getting monotonous. But we'll come back to those reports. Oops, I thought I took that prepaid off. So we did prepaid today. We're going to talk about estimates coming up soon, creating estimates, why to create estimates, or reports around estimates. We're going to go into job profitability, work in process, some more of the advanced reporting. But basically, if you have anything that you'd like to learn, please definitely put some stuff in the chat and let me know. I'm going to hang out here for a second and see if there's anything that you have questions on. Otherwise, I will see you guys next week.